Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to be looking at the 45th Commitments of Traders Report of 2019. And we shall start the analysis by looking at the largest changes in commercials positions. You may see the Australian dollar on top of our list with a 26% change in commercials positions. There's a larger than average change size in large speculators as well, 34% over there. Of course, this can be considered bearish on the market. In the near term, we can expect some further weakness in the Australian dollar. Moving on to the 5 years chart, you may see that we have been in the past couple of years, we've been moving away from this bullish COT Extreme, which, by the way, as you may see, was not effective. It could not shift the trend, and the Australian dollar is still in downtrend mode. Now, of course, we're definitely far away from any bearish COT Extreme, but that's not something that we're surprised about. We may see a bit of an increase in bullish Extreme in the market in the next couple of months if this trend continues. Moving on to the Nikkei, we have a 22% change over there in commercials positions. Not that large. We've seen much greater changes in the past. Nevertheless, it is a bearish COT change signal, suggesting we could see some decline happening early next week. Which of course could be very healthy for the market, which has been in rally mode for quite some time now. Now, of course, the extreme that you can see over here on this 5 years chart shows us that we're actually still a bit closer to bullish extreme levels. We're pretty far away from these bearish ones, like the one I'm just showing to you from April of 2018. So that's something that we could definitely put beside us if we're still expecting further rallies in indexes. Of course, we're going to be talking about the VIX shortly to see what that tells us. But before I go on, let's talk a little bit about lumber, where we have this 20% change in commercials positions, 21 in large speculators. Again, bearish COT change signal, suggesting we could see some price movements downwards in the next few days. And a 5 years chart will show us that we are actually moving away from these bullish COT extremes that we had in the past. Well, this one from May of this year and the end of last year, we had that bullish extreme in the market, which ended this decline. The market could not really go lower, but of course, we're still waiting for the rally to happen. And of course, if it does, we definitely expect traders to push their positions toward bearish extreme levels. But we're, well, I wouldn't say that very far, but there's definitely space left to reach those bearish extremes. Now, moving on to large speculator COT Extreme, let's have a look at that. We still have the VIX on top of our list with a all-time COT Extreme. So stress levels have risen from last week. You may remember we talked about the VIX. And of course, the fact that we have a bullish extreme over here means that we can also consider this to be possibly a good opportunity to look at stock indexes in a more bearish manner. If the VIX is very low, then of course that means that risk appetite is high and stock indexes are rising. So this in itself is, I believe, a warning sign, which of course could continue, as I said last week. So you may see examples in the past when the stress level towards the bullish side was present in the market for many weeks before there actually has happened a rise in the VIX. So that's something you should keep in mind. The next market is a metal, platinum, with 165 report extreme in large speculators. You can see it on the chart over there. It is, of course, a bearish COT extreme, suggesting lower prices in the medium to long term. I don't think there's anything else I can add to that. Moving on to our last market for this review is the soybean oil, with 109 report extreme over there in large speculators, also commercials at their extremes as well. Bearish extreme, no question about that. Soybean markets are definitely considered one of the best markets to analyze from the COT reports perspective. These markets react very well to these COT extreme signals. A few examples for bullish COT extremes, and of course some examples for bearish COT extremes as well. and this is definitely becoming a very strong bearish COT Extreme. Doesn't mean this can't continue on for a few more weeks. It's just good to know stress levels have been rising, and they've reached a level where we should definitely have our eyes open for any opportunity in the soybean oil market. That was our last market for this review, as I said, but you can easily continue on if you subscribe to COT Base and check all market categories, and of course you can look at new COT report types, other data types. The options only data type is something very unique that you can only find at COT Base. You can do a more in-depth and detailed COT analysis by looking at multiple report changes. You can look at the COT index, the move index, check the long-term trend indicator, and of course analyze volume and open interest as well. So I appreciate your attention. Thank you for being with me. I wish you a pleasant weekend. Take care and goodbye.